oh boy, do we got ourselves an interesting market. Hey, I got a lot of arrows on my screen right now that I'm going to talk about because every time that this arrow kind of shows up, it's actually at an interesting point in as far as gamma goes. So we're going to talk about that. Man, I'm recording this, and as soon as I hit the record button, I see Bitcoin drop like 7%. This market is just all over the place. So we're going to talk about it, map out some key levels, because there really is just one big thing going on tomorrow. I should say maybe two things. We have macro data, we have Fed Chair Powell speaking, and obviously we've getting hit left and right with these tape bombs. So we're going to map out some key levels, show you some of these signal charts, where they kind of line up, and kind of go from there. Let's get into today's show. All right, ladies and gentlemen, welcome back. Before I get into it, I forgot to mention, got to thank all my patrons and my partners, Interactive Brokers. I got some links in the pinned comment. That's all I'm going to say to that. We're going to start off looking at this chart. And this chart here is a chart of the S&P 500. And I got some levels drawn out on the screen. Ignore the white lines, right? The white lines were from today's price action. But I wanted to just call out that it's been basically one steady steep move to the downside. And right here is that gamma flip line that I put so much emphasis on as far as market conditions go every single time that I post a video, because it's that important to really understand. Well, how long have we been under the gamma flip line? Because it is changing. It is dynamic. Well, right now we've been there 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days so far in negative gamma territory. And some of that, what I say when we're below the gamma, what we say is dealers will sell into selling, they'll buy into buying, which means volatility typically increases, liquidity dries up. But the best way to really highlight that is simply just looking at the times we're in negative gamma, which is the darker blue, right, underneath that zero line, and then highlighting it on the VIX. So you can see we got into negative gamma, we got out of negative gamma, we got in, we got out. And you can see when we go into it, it's a great insight to potentially seeing volatility really start to take off. We saw this big move over here into August. And then what do we got going on right now? Well, this day over here, when we started entering in 10 trading days ago into negative gamma, it happened intraday and the volatility took off, and it gave us some insight to saying, hey, this is where things could get a little crazy, so let's buckle up. That's one of the things that I look at as far as market conditions. The second is the direction of the 5-day moving average. We'll touch on that one in a little bit later. So why am I showing you these specific arrows? Because there's another way that you can kind of look into this. And what I did was here, you can see that where we are as far as negative gamma goes, it's getting pretty frothy here to the downside. And if you just look back through history, the last times we were here was really August 5th, 6th, and 7th at this specific level. So I wanted to highlight, okay, well, we're also pretty low here, and we're also pretty low here. So what does that look like on the chart? Well, here you go. August 5th, 6th, 7th actually happened to be after some serious sell side, and it found a market bottom. You saw this little low right over here, right? That was the one there shortly after, right over here. Okay, if we go back, you can see that this one right over here, it marked a low. It actually kind of bottomed out, and then we moved. And then over here, which was in December, this one right over here, you can see that we actually closed a very strong move to the downside. This is, if you don't remember this day, this is the day that I was at the NASDAQ closing bell ceremony, which felt like we kind of kicked off the market mayhem over here. So there's a post on Twitter that when we on the day I said this is a market top. It wasn't the market top, but sure as hell started off this volatility. It was more of a joke than anything. But then we started to recover, right? And there shortly thereafter, we went a little bit lower, started to bounce, then we saw more volatility and so forth. Well, the reason why I'm just showing you now is because it is getting pretty frothy, and we're coming down into that inclining 200-day moving average. So this isn't to say that we can't go lower, but if we do go lower, where could we potentially go? Well, be mindful. An hour before the market opens up, we have some jobs data, and we have Fed Chair Powell speaking there a little shortly thereafter. So it's going to be important to pay attention to what we have as far as expected moves. And let me just go off by saying they're big, okay? We'll talk about those in a moment. Let's go ahead and take a look at the S&P 500 from a weekly perspective. This is a very large range candle. The last time we actually saw a candle of this magnitude, it was right over here, right? So it was about the same length. But if you go back throughout history, I drew a little line on this and kind of went through it. And I was like, wow, we haven't seen one of these really since and around the 2022-ish bear market, where we started to see this width and this range of a weekly candle. So sometimes when you get these very strong moves, you can see snapbacks, right? We always talk about the rubber band effect, how, yeah, or just looking at the markets move between expansion and contraction. When a rubber band expands, it'll typically contract. But also just be mindful that sometimes rubber bands snap, they break, right? And crashes do tend to happen from oversold conditions. Right, risk happens kind of slowly, and then boom, it happens really quickly. If we take a zoom out of the weekly time frame for the S&P 500, the divergence that we've been tracking is playing out into that 40-week moving average. It doesn't look like anything, huh, when you like zoom out and you like look at the big picture, but it feels like something, right? So the MACD is still pointing basically straight down. Yeah, can we see bounces? Of course, but every bounce should be monitored very closely given the context of where we stand as far as market conditions go. Now, as this is coming in too, I wanted to bring up the Qs on the daily chart because we kind of slammed into a pretty interesting level here at around 485. And the reason why this is interesting to me is because when we approach these levels, we've seen some pretty explosive moves from it. So for example, we saw an explosive move to it and pushed away. Then we saw an explosive move break from it. Then we gapped overnight through that, and we saw explosive move to the downside. Once we came back up to it, explosive move back to the downside. And then you could see even over here, it's acted as support, and we've seen some pretty explosive moves from it. And now we're pulling right back into it. Are we going to see some sort of an explosive move back up to and around 500 on the Qs, potentially higher? And if we do start moving up higher, where can we potentially look for a dead cat bounce level? Well, you can pay attention to 510, and if it starts coming back down, that could be considered a dead cat bounce if it takes out these levels. Or we get a gap down risk, but we got to look now as we're coming into a key level that's held as a potential area of support. Where can we potentially see this market? So once again, I'll be talking about those expected moves. Now, as this is happening and as we're coming into some key levels in the market, we also are getting just continued oversold conditions in our bullish percent index charts like the BPCO and BQ. So we have the positive divergence there. The RSI, right, is about flat. It looks like it might be taken out here soon, but it's still not really as oversold as it was back over here in November, but it is the lowest it's been since, well, November of last year. And this is even more oversold than it was here in August. If you take a look at the NIA or the NYSE bullish percent index, also same thing, right? It's been coming off a bit. We have that bullish divergence. Remember, oversold can remain oversold for some time, but that's where we're at now. The discretionary sector also now has a bullish divergence here, a low to a lower low, and we're kind of seeing a little bit of an uptick, and this was driven by a few names. Mainly there we got Tesla, which is a huge weight in these discretionary names. And then you can look at the technology sector. It's been coming off now and doing around that 25% marker, which is the last times we've seen it pretty extended to the downside around 25 to 20. And that RSI is now moving into oversold conditions. So we're getting a lot of these oversold type signals on our radar. And probably to be ready and prepare yourself for some sort of a bounce here. And remember, if the jobs report comes in and the market likes what it sees, we can be up anywhere from $8 to $10 in the S&P 500 tomorrow, and I'll show you that in a moment. Here's the BPSPX chart. It's not it's oversold on an RSI perspective, but we don't have a bearish or bullish divergence, but it is coming into a prior level where we saw it bounce from before. So we'll see here if this turns into somewhat of a bullish divergence to give us a little bit more something to kind of sink our teeth into. Now, as this is also taking place, back month versus front month volatility is now down to under 0.96. Remember, when it gets out into these areas, the market tries to find itself some footing, get its head off the mat, stand up a little bit, and we haven't really seen that yet, albeit the last 3 trading days have been kind of sideways overall, with today obviously being down. And this is also occurring while VIX futures remain in backwardation, so it's just telling you, hey, we got problems here right now, and eventually we see volatility lower into the future. So remember, these curves are supposed to go this way, right? Where you say, yeah, everything's good now, but we're always going to plan for things that could potentially happen into the future, right? Risk always happens out there, but right now it's happening right now. Let's take a look at those expected moves. Here's a picture of the SPY on the daily time frame. Where do we stand? Take a look right there. We're outside of the weekly expected move by a pretty decent bit right there. Not quite a 2 standard deviation move, but we're darn near close. This was a $12 expected move, right, for the week, and we're outside of that. And just this was the largest expected move we've seen all year. Now, this is where it gets crazier. Tomorrow, we're looking at a $9 expected move, which is the largest expected move, pretty sure from a daily perspective, that I've seen all year long. So tomorrow is an important day here. If we start breaking down, watch for the lower month-to-date expected move at 568.24 on the SPY. But if we start ripping right back up to the upside, we can be right back at that lower weekly implied move, what the market has priced in there on last Friday. So be sure to watch this channel, subscribe, and all this good stuff, or come into the Discord because we'll be updating you on those weekly expected moves for next week as well. If we take a look at the 15-minute chart on the SPY, you can see our expected move up here at about 581.68 to down here at about 563.74, which is just slightly underneath that lower month-to-date expected move. So if we break down, potentially watch for a move back into and around that lower month-to-date, which, right, this is only week one coming down to this level. It's not a small move by any means. But if we do start ripping to the upside, the upper daily expected move is in confluence with the lower weekly. So if we can get up there, could potentially go more, right, if the market sees and likes what it sees. But just understand that the direction of the 5-day moving average still continues to decline right now. So be careful, right, because you can get above it, but if it's still declining, you could still see things like this take place, which we just recently saw. Okay, if we take a look at the Qs, I'll give you this expected move for tomorrow. Qs upper daily is about 497.36, and then down beneath us, I'm just going to round it at 479. If you want these levels, I post them in the Discord, or you can screenshot them and put them on your charts. Remember, also below a declining 5-day moving average. We started to get above it here, started looking good, but it was still declining, and then it pushed away, right? It got up here, looked good, and it pushed away. Okay, so just be aware. It can take time for these markets to kind of fix themselves. If we take a look at IWM, declining 5-day moving average, daily implied move can take us down to the lower, slightly below it, and that's roughly at about 200.69, and then above us at about I'm just going to say 210 and round up, which would bring us back into the weekly implied move. So, I mean, in short, we have IWM outside of its weekly expected move. We have Qs slightly out of its expected move, and we have SPY well outside of its expected move too as well. If we touch up on market conditions, once again, we are below the gamma flip line. Remember, selling begets selling, buying begets buying. Just be mindful that we can get some big two-sided trade. I think we've been very clear here that that's what we've been dealing with. When we look at the direction of the 5-day moving average, they've been red all throughout this period over here with a couple of moves where we're like, okay, maybe it can start here, right? Nope, it got rejected, right? So that's why you always got to manage risk. We're below the year-to-date VWAP on all of these products. So just to sum it all up, people, we are seeing some overextensions, mainly here in net gamma. Yes, we have some signal charts also showing us some extensions. Yes, the Qs are moving into a critical level after a very strong move. These could be the levels where you start to see short sellers start to cover. You have more people potentially try to buy the dip. But just please be aware that we have risk right here and right now. It's not a small expectations of moves, so just be mindful of that. If you're overly confident, you're like, this is what I think is going to happen, and trying to make a specific call in this market, you better just be willing to change very quickly if you happen to be wrong. And if you happen to be right, make sure that you're managing that position properly and not doing something that can really hurt your portfolio and kind of just take a long time to recover. All right, that's all I got for you. See you later. Hope it helps.